Hello, everyone. Welcome back to the RationalInvestor.com's. What is this? This is our Crypto Top 100 show. Dun, 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 dun. I think I'm screen sharing our crypto page here. I have a bit of a time change with Ben and Paul. We had the daylight saving, so I don't know whether they're going to join us now. Paul said that he wanted an extra hour or so. He did just post in our little chat room there that he was up, so I just basically said join when you feel like joining us, and we'll take it from there, see how we go. If, first half hour, 45 minutes, I usually blab away about what I'm seeing in price anyway. So we'll just see how it goes. Play it by ear. I think we'll probably do this a bit shorter episode this week. As I said, we started about 40 minutes late because of the time difference, and I probably want to wind this up around 8:30 anyway. So our spreadsheet, I don't even know who won the great competition. See, which one is it here? Got so many of these darn spreadsheets. Crypto 100 view, I think this was it. And I suppose the question is, what the heck did Bitcoin and etc. do? Hey, there's Paul joining us now. So good morning, Paul. I hope you're doing okay.
Good morning.
Hello. I understand it's I don't know whether it's an hour earlier or an hour later for you, but you said that you were up, so I was like, let's get this thing going. If you want to go back to bed and come back in a half hour, 45 minutes, fine by me. But if you are up and ready to go, then let's have some fun here. I'll do my, usual sort of opening rant, and then I guess when the dust is settled, if you feel like presenting something to these good people, we'd love to hear what you're seeing in the market. Let's see what we got here. So Bitcoin, I guess, as a broadcast, we'll use Stamp. I'm not quite sure if we use Stamp or if we use a different exchange for these, but we'll go with Stamp here. The hourly chart, I guess we'd like to do this on the 6-hour candle. So I guess that's basically that bar. That is a close at 24,298. See where the heck that is. 24,298. Oh, that's a pretty big rally. So it looks like Paul was the big winner again. Gee whiz, that Paul guy's turning into one hell of a predictor now, eh? Nice job. Divide by 0. Now, why did that happen? I guess maybe. Let's see what happens if we do that. Boom. Oh, that didn't fix that. F91 minus F89, so 89. Oh, why is that 0?
Can you hear me now, Brian?
I beg your pardon?
Can you hear me now?
Yeah, I can hear you now. How's it going?
Yeah.
Sounds like
good morning.
Coming through loud and clear.
Yeah, nice.
Let's see what we have here. I just have to figure out how you guys have done this. I guess this should be 90, not 89. 90. There we go. 12% rally. Ooh, so there you go. Not quite a yellow.
Yep.
Ben was negative with me. But at least, hey, you were on the positive side. So
Yeah.
what is that? Let's see how we do that. This would have been 90.
You don't share your screen yet, Brian.
90. Up $2,598. Ooh, 25,298. Does that sound about right? That was this number here, right? 20. What the hell does that say? 24,298. Did I get that number right? Let's try that again. 24,298. Yeah, that's right. All right. So there you go. I don't see your screen. I don't think I was screen sharing. I think it's showing on YouTube because nobody was here with me. So let's see. We will go present now, and we'll go your screen, and there is the spreadsheet. So, like we said there a moment ago, Paul was the big winner. Winner, winner, chicken dinner. Way to go. I don't know whether we're going to see Ben tonight. We might not. Like I said, we'll probably make this kind of a shorter broadcast. And there's only a few people watching this anyway. 7 people. Hey, there you go. Hello, 7 people. We've got Raphael McEnroe, brother to John. Hey, Brian, what's the times to catch on Saturday about the overseas trip? Oh, we're going to do the boot camp, and that meeting should be about, we'll say 10 o'clock Pacific time. So I'm not quite sure where you are, Raphael. Maybe tell me where you are in the world, but 10 a.m. PST is what time in Majorca? I don't know if that's how you spell it. But this is where Chris is, and Chris sort of quarterbacks these things. PST, that's me on the west coast here, but where the hell's Majorca? These are all images, and I don't know if I spelled that right. I probably haven't spelled it right. Majorca, Spain, something like that. Palma, downtown, but this isn't going to help us. We want to know what time it is. Okay, so 10 a.m. In the West Coast is 6 p.m. In Majorca, and that's where Chris will be. I don't know where you are in the world, but maybe you can take that information and plug it into Google, and it'll tell you what time your local time is. So cool to see that you have expressed some interest. OTC Big B says, you are in luck. The trip is going to... I know who that is. No. Unless maybe the plane's hijacked. We're taking you to Tehran. You're all going to get hoods. OTC Big B. You gave yourself away there now. Now I know who you are. Oh, that's great. Anyway, so for whatever it's worth, if you are a TRIer and you are interested, we run a day trading program called the Battle Stations. First thing in the morning every day, trading futures contracts. Wow, we had one hell of a gold setup there today, eh? Did you see that daily brief? That was ridiculous. So, I mean, that's basically what I'm going to be teaching you guys. Ironically enough, Paul just, when he demonstrates his lower time frame setups, it's basically the same thing. Because basically everything that Paul does, he learned through TRI. Plus a few extra tricks that he has, of course. But yeah, so that's what we're going to be doing. If you are interested, see if you can be around the site, like I said, 10 a.m. Saturday for that group meeting. Just want to find out if there's enough interest from the community to actually put this together or not. Or whether I know we have about a half a dozen people that are kind of committed right now. We need to get that number up to about a dozen, and then it's worthwhile doing. So anyway, interesting little advertisement for that. Not really the purpose of today's video, but at the same time, too, the irony of it all is you can apply all this stuff to crypto. It's the same logic. In fact, what I actually found fascinating is like a concept like the kill zones is supposed to be about liquidity Monday to Friday on the opening bell of these exchanges like New York, PID open, and the London session open, and the Asian session open. And yet the irony of it all is when I first got involved with crypto, 10 years ago, and we noticed that, Saturday morning, same thing, exact same logic. So it's not really like it's just specifically about the futures markets. It's more like it's I think a human behavioral pattern. First thing in the morning, quite often people wake up and unfortunately they they've been dreaming and stuff, so they act emotionally and they kind of make foolish decisions right on the opening bell there. But anyway, I digress. Today, and this show is all supposed to be about Bitcoin and crypto and all that funness. And I tell you, man, there was some wicked trades there in crypto this past week. It was kind of funny through that whole banking crisis. People were freaking out. And yet, I happened to catch one of these coins that went a little bit nuts. I noticed, and I've talked to you guys about Elian. I think he is another one of your Romanians. Jesus, Romanians are just on fire. Elian, I think I'm pronouncing his name correctly. I always butcher this. Sorry, dude. Anyway, you can see you got another one off here, 3:30 in the afternoon, my time, which must have been the middle of the night for him over there in Romania. But boom, there he goes. So I mean, they're popping up all over the place. And actually, a newer person to our site is actually looks like he's trying to get in on the action as well. So good to see we've got new and veterans doing well on the site. Well, interesting market state, that's for sure. I will say, based on our algorithm, we actually had a buy signal, I guess, a week or two ago that was actually probably maybe like a 2 or 3 days too early. So I did, for the purposes of this is one trading plan that I happen to run that's just trading, just simply buy when this issues buy sell signals, go back into cash when it issues sell signals. And it had us buying crypto there back on March 5th, 6th. And interestingly enough, I actually even banged out a manual short trade in this window, and I had to leave the algo trade it just long. The position was down about 10% or so before the Bitcoin market actually did turn, and then all of a sudden now we're nicely profitable. So go figure. But I've been putting out tweets and stuff. This is the old way that I used to report when I used to be a licensed commodities broker, and clients who kind of wanted to know, is wheat a buy, is soybeans a buy, is the Canadian dollar a buy, blah 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 blah. I created this weekly commodity trend survey. That's what WCTS stands for. And I would just go through all the commodities and just rate them based, number one, on what their relative position is given their 52-week range, and then what the weekly moving averages relationships are. And if you are at the very bottom end of the range and the moving averages turn bullish, then you get a 6 rating. If it's any combination thereof, you're going to get a lower rating. It's actually interesting to see. We do have a few commodities. There are more commodities like recently. Most of the commodities were 3s and 4s, but actually we are seeing a few 5s setting up here. So some of the commodities are starting to look interesting. But that's not the purpose of this conversation. The purpose of tonight, of course, is to talk crypto. And I got to say, man, I was pretty darn impressed. I mean, that's a hell of a lot of 6s. And 6 is the absolute highest, best rating you can have. It means that the asset is down at the bottom end of the range relative to its 50% rule. And the moving averages have turned bullish. So here, like this AVAX, you can see the 52-week low is $10.54. The high is at 103.62. So one of the first lessons I ever learned, the 50% rule, Technical Analysis 101, WD Gann, just going back like, 25, 30 years almost now. If we're $16 and the 50% level is 57, then that means if I get any kind of buy signal here, there's a pretty good chance I can double my money. In fact, you could even make the argument I might even be able to triple my money. And that's just off of nothing more than just a purely normal technical bounce, right? The 50% rule, WD Gann, keep it simple, stupid 101. In fact, actually, we had, and on Friday, we'll have one of our site OGs who actually did the entire education program, and he's now off a principal of Hero Exchange, I think it is. Colin, he's going to come in and have a nice little chat with us on Friday through the Daily Brief after party show. But he was the one actually who reminded me this. And of course, when you look at the weekly commodity trend survey, you can see that in glorious Technicolor, right? You won't get a 6 on these things unless the market is substantially below its 50% rule and the moving averages have turned bullish. Hey, there's Ben. Hey, Chief. Welcome, welcome. Um, so I thought it was really interesting the other day. Colin actually was the one who sort of tweeted this out saying, I fully expect Bitcoin to bounce 50% in about 50% of the corrections time frame. This is like, I always tell people if you're watching these videos, keep your journals out. Get ready to take screenshots because we drop like nuggets of wisdom constantly through this. But Brian talks 100 miles an hour, so you never know when the hell they're going to pop up. But, there it is, plain as day. This is WD Gann 101. So he would actually suggest that probably by, let's call it May, June, somewhere in that area, we're probably going to bounce all the way back up here to about $30,000, $40,000. Call us crazy, but that's technical analysis. I took this one step further because, of course, I'm an options broker from years and years ago, and we have a stock pickers club and an options trading club at TRI. Actually, we had our meeting last night. It was a lot of fun with the gang. And this is the Bitcoin ETF that trades on the stock market. So now we can actually trade the options on crypto. And I actually think there's a really cool option spread trade that's better than this was just the teaser I did for Colin's tweet because I agree with him. I think you're probably going to see 50% bounce in about 50% of the time that the entire correction happened. And if we do get up to that 50% rule, here's the whole write-up. Nope, that's not it. We got it in here somewhere. Here it is. I think this is actually a better than 8-to-1 risk-reward trade. 8-to-1? Son of a gun. So you're going to go and buy the 22 call, and you're going to write the 27 call. It'll cost you a grand total of about 58 cents, somewhere in that neighborhood. And if the market does go up to the 50% rule, then everything gets called away from you, and you realize the profit of buying at 22 and selling at 27, which is $5. And it cost you about 60 cents. So what the hell? That's a pretty damn good looking trade. So where was I going with all this? I can't even really remember. I guess I was talking a little bit about Colin. He's going to be on the site on Friday. So if any of you who are watching this are TRIers, be sure to tune in on Friday. He should be on the call there Friday. Should be a lively conversation. Okay. I'm gonna come up for air now. Hey Ben, how's it going? Are you here?
Hey, yep, I'm here.
All right, way to go. Welcome. Paul did wake up a little bit earlier, so I loaded it up a bit earlier, and I think we'll probably wind this show up here in the next hour and a half kind of idea. We don't need to make it a marathon, but we did start a little bit later to give Paul a bit of more sleepy time. So with that said, on Sundays I do it's a show called the Broiler Chicken Show. Why broiler chickens? I don't know. Why not? It's kind of a fun name. And I go through and kind of like Paul's done in his newsletter, taking inspiration from him. I just pull up a weekly, daily, and 4-hour price chart on the Bitcoin and just sort of, Sundays talk a little bit about levels and what I think is going to happen going forward. So this was, I guess, the latest offering. And this was a really interesting situation because while we were doing the video, it was just a real question of whether the market could rally back and actually print a hammer candle here. And if it did print a hammer candle, and I even made reference at like minute 37 or something like that, because I even did a follow through tweet about the hammer. If we did do a hammer, then we're probably going to reverse and break out to new highs. And sure enough, that's exactly what happened. So I'll take 5 minutes and just review this, but the full review that I do is on Sundays. Let's see if I can do this in a nutshell. So here's our weekly chart. There is that hammer candle. And interestingly enough, off of hammer candles, the technical target of a hammer should be just basically the replication of this. Think of this as like a bull A, B, C, D. So if we drill down to like, say, I don't know, something that you guys would appreciate, like a 4-hour chart, there is the hammer. It actually goes there, up to there. There's the consolidation. There's the expression. And sure enough, doink, we slammed into that target. And then we just basically calmed down. Still think that there is a lot of interest by institutional players to sort of put a ceiling in this market off of this 25,000-ish level. We had kind of not joked, but maybe pondered a little bit. Why was this Foggenbaum level not traded to? Well, turns out that's exactly what happened there. So nice big dump, get everybody short and thinking down, and then they rip it up, hit the validate the Foggenbaum, and there's your top. Big old railroad tracks, bang, bang. Be interesting, well, I guess not the best looking railroad tracks, but a pretty powerful reversal 2-bar pattern there anyway. Got to sneeze, hold on. All right. 3 is usually lucky. Sometimes I do 4. That's when it gets crazy. So I'm still, believe it or not, in this sort of consolidation kind of thinking. Pretty wild action. I suppose you could make the argument now wicks and tails like to be eaten. So I guess we don't need this hammer reference on here anymore. I think you could actually make the argument our new trading range for the time being is that is your high and that is your low. I might make the argument that markets started to lift on I guess markets started to sell off because of the whole banking crisis and how bad was bad going to get. Thank you very much, Big B. And this happened to be on Sunday, right here as the market started to reverse back to the upside. This was when we found out that actually, number one, the banking crisis didn't have anything to do with bank insolvency. This had more to do with the fact that the banks were euchred into buying long-dated treasuries with all the deposits that people deposited through all the stupid stimmy and just mailing out free money to everybody and then interest rates going to zero. It was like almost the perfect trap. I spent actually a long time in the Daily Brief today talking with site members that I actually think to a certain degree this was entirely intentional by the big money center banks, by the U.S. Federal Reserve, to try and trap the regional banks into this trap, and then with them cranking interest rates higher and this whole hyperinflation wave, the regional banks were trapped and they were screwed. I think you can make the argument that the regional banks got a little bit sloppy with their risk management. They even publicly said that they didn't even have anybody in the risk management department for like the past 6-8 months because, Janet Yellen would just publicly say interest rates are never going up. Borrow as much money as you possibly can. Blah, 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 right? And I think that the regional banks got trapped. I think they literally got trapped. And, I wouldn't be surprised 50, 100 years from now, we find out that indeed this was the plan of the baby eaters from Jekyll Island. And they got them. And now they are slowly putting all these regional banks, all of these, crypto-friendly pseudo banks, putting them all out of business, just like that. And this is going perfectly according to their plan. It is interesting to see how the credit crisis did potentially spill over into European markets. But actually, from what I understand, halfway through the day, the Swiss government came out and said that they will guarantee Credit Suisse's deposits. And so that theoretically should stave off the bank runs over there in Europe. I don't know whether Credit Suisse has been a problem for a long time, like Deutsche Bank. So I don't know whether it's exactly the same problem, but I do smell a rat here. Something just did not smell right about all of that. Now, the interesting side effect to that, of course, is that I think the public or the market initially when on Saturday you started to see Bitcoin lift, I think that the market just went, here we go again. And I would make the argument that the whole reason why Bitcoin did as well as it did over the past 5-10 years is because of this. It's really simple, folks. The powers that be in our world absolutely blew up their money supplies. I mean, I've been working in the industry for 30 plus years. It was sacred. You are not allowed to fuck with your country's money supply. Zimbabwe was famous for screwing with their money supply and the dictator, spending his way out of problems. And we all know what happened to Zimbabwe currency. Venezuela was famous recently for doing exactly the same thing, printing their way out of troubles, but it just makes hyperinflation absolutely insane. Weimar Germany, the same thing, reference to the 1920s. I mean, you can go on and on and on. You're not supposed to fuck with your country's money supply. And these dickheads went and fucked with the country's money supply. I think that this gentleman got a very stern lecture from people like Stanley Druckenmiller, who actually do have some authority in the United States. And we're like, what the hell are you doing to our country? Stop it. But the problem is that, in my country, there is no Stanley Druckenmillers. So my substitute drama teacher, who's running this country and who thinks he understands economics, he is continuing to mess with the money supply, and actually spent a lot of time today looking at the commitments of traders reports and us talking about the future of the Canadian dollar. And I'll tell you, the traders are all set up for the Canadian peso to get absolutely destroyed here because substitute drama teachers think they're smarter than the market. What I did find interesting about this was that these guys came out Monday and explicitly said, this is not a bailout. We are not turning the printing presses back on. We are just doing nothing more than just guaranteeing the principal value of the bonds that these institutions bought because Janet Yellen told them to buy these bonds, and everything else was paying absolutely no interest, so they had to go and chase yield. And I actually, in the Daily Brief today, I even shared the video by Miss DiMartino Booth, Chris's girlfriend. This lady. So if you don't believe me, just go listen to her. She actually worked at the Fed for like about 10 years. And this is basically exactly what she said. This is where I learned this. So I have an immense amount of respect for this lady. She is the shit, no doubt about it. And really, she walks you through this whole scenario. You like that, Jay? I don't know why. Chris really respects her, and he always remembers her name and how to pronounce it perfectly. So I've just officially called her his girlfriend. Hey, and really, Chris would be her boy toy. Because actually, Chris is a pretty good-looking guy. I think if she was propositioned, I think she'd go, you know what, I could hang out with Chris for a bit. Anyway, so when they officially came out and said, this is not a bailout, this is not a money printing, we are not turning the printing presses back on, then all of a sudden, Bitcoin just stopped in its tracks. And like I said, we've actually been sitting here for the past couple days. Everybody in Bitcoin land is kind of like, okay, are the money printers on? Are they continuing with the printing, or was this just a head fake? I did find it interesting that, and I think I've told you guys that this is technically the Ides of March. This is actually a period of time when us humans go a little bit stupid. And frankly speaking, the whole crisis started over here. And of course, we have the Fed meeting over here. And I think the Fed still wants to raise interest rates. There were a couple data points that came out today that were relatively benign. So, you might find that the Fed says, actually, given the fact that PPI came in slightly down, I don't like the fact that, the Canadians stopped raising interest rates. And then instantly the housing starts all started to explode higher again. So really, and this is all about the fact that these damn Wall Street guys have gone and securitized homes. Coming out of the Great Depression, they spent a lot of time and energy getting the fucking banks out of the sort of trading houses and houses as securities in the marketplace, because that's half of the reason why people got into trouble through the Roaring 20s and the Great Depression, and everybody ended up living in Hoovervilles. So the banks have gone and done it again. They've gone and securitized houses. And so as a result, now you even hear Powell saying that we never used to have this. It used to be cost push, demand pull, two simple factors in the inflation equation. Now we have cost push, that's like raw materials, oil, food, energy, whatever. And then demand pull, that's all about wages, consumer spending, expectation for inflation. But now we have this whole housing industry that's being inflationary, pumped up by the what's the BlackRock capital doofus, who's gone and just completely screwed. Now anybody coming out of high school, there's no way they can afford a home thanks to them securitizing these houses. And it's weird because we're getting a lot of really weird cross currents. Like in Phoenix, Arizona right now, the rents are falling and the house prices are falling at the same time. And people are, including myself, are left scratching our heads going, what the hell is going on here? I mean, classic economics has been thrown right out the window. Is that who's in charge of BlackRock? Is it Larry Fink? Is that his name? Anyway, so the point of the matter here is, and actually it was kind of interesting because I have been passing around this image on the site that I believe what's happened here, and this is dangerous, folks, is this is a megaphone. And usually the third tag of the megaphone is actually a trade location. So it was interesting. Like I said, the algo, I think, went long here. Oops. We had another leg lower, and I actually manually shorted Bitcoin here. It turns out that I covered the trade at a nice profit, so I felt pretty good about that. Never did get a sell signal on the crypto breadth indicator, which is very, it left me sort of puzzled. But, this is half the job of vetting out these kind of tools, is you got to see what the hell the results are going to produce in the marketplace. So don't take too big a bet. I think I'm betting like a couple grand or something here on this experimental portfolio. And I mean, interesting, like I said, the algo told me to go long. The market did tank, but the algo never told me to get out of this thing, so I stayed long. And then the market just went absolutely nuts here. Go figure. And the algo is still long, so try and figure that one out. Anyway, the point here is I actually think that this isn't a bad short trade location, which is a bit scary, just based purely on the megaphone thinking. I will say that since I covered this short and I was left sort of scratching my head, publicly I was saying, okay, can I see signs of divergence down here? Can I see signs of a W? Can I see I like to have 3 unrelated reasons to justify acting. I didn't get those. If we go down to like the 4-hour chart, which was this one, there's that megaphone. There's the bottom. And it was uglier than stink. I know that some of the guys on the site that were following this, if we go all the way down to a 1-hour chart, we do actually start to see divs. But I didn't have anything to work with. I mean, I had really stupidly oversold. We were at a trade location, bear ABCDs, bottom of the megaphone. This was also a descending wedge. It was bottom of a channel. It's just I didn't get the divergence that I like to see to set up my trade. And the W that did eventually end up coming in actually came in way up here. So I felt very uncomfortable about buying that level there. I kind of felt like I had missed the boat. So I never did hop on the long side. I suppose hindsight 2020, I think you could make a logical argument for a long down in here. And my hunch is when we talk to Paul, we're going to find out from him that, yeah, he went 100x long here and he made $5 million. But we'll see what he says. And I guess one thing that bugs me about this, like I said, the fact that we're starting to megaphone out here concerns me immensely. I'm also seeing too, like, don't you know, just kind of like what I said about the bonds and the way that SVB got kind of fucked over there by the U.S. Treasury Secretary and the cartel of banksters. Um, I'm not alone in this megaphone kind of thinking. In that somebody on the site, I don't know where it was, I thought it was earlier this afternoon, somebody on the site had pointed out that there's actually other people that, you know, are fairly respected market participants that are also screaming megaphone here. So I definitely think this is worth paying attention to. This isn't like sort of like, oh, Brian's off on some crazy ass tangent here. I'm just trying to find where the hell it was posted in the lounge just to show you. You've probably heard of this guy before. I don't really know him personally, but I have interacted with him over the past 10, 20 years. Peter Brandt online. In fact, I remember when he first came into the crypto space, the crypto kids really gave him a hard time. But you can see he's starting to bark megaphone here. You can see that similar pattern here. This is dangerous, folks. If this is actually a megaphone, then that is a trade location. And what we have to understand, put it into context, is look what's coming up next week. And I'm worried because you can see FOMC, bang! That was a really nasty one, bastards. FOMC, small bang, but nonetheless a bang. FOMC, bit of a bang. We actually had the U.S. Senate hearing, which I think sort of saved the Bitcoin market to a certain degree because it kind of changed the narrative. But nonetheless, you can see that even the dump here, if you had looked back at the previous FOMC, you would have said, well, you know, it looks like they tried to stop the market there. So here we go again. So we've got FOMC coming up here next week. You know, if you are watching this and you'd like to have some fun, we actually post on FOMC decision date, which will be basically 1 week from today. Through the FOMC meeting, we usually do like a public broadcast, and we bark a little bit about what we're seeing out of the Fed speakers and the press conference and all that. Could we go up and maybe make another new high here before this FOMC happens? Maybe. I wouldn't put it past them. I don't really have any trade setups here per se, and I didn't really get anything here. So I am still long based off of the algo, but that's the algo. And if the algo tells me to close the trade, then so be it. I mean, I suppose you could even argue if you go down to like, say, like an intraday chart. As I said, as soon as Bitcoin and this market, and I saw a lot of these markets do this, as soon as they sort of found out that, well, the Fed's solution to this quote unquote banking crisis is just to let these banks put forward their the bonds that they bought because Janet Yellen told them to buy those bonds. If they put them up as collateral, the U.S. Federal Reserve will give them full face value for deposit redemptions. If people are like, hey, I want my money back, then they can put the bonds up that they took the deposits with to buy, and the Fed will loan them 100 cents on the dollar, being able to basically redeem customers' deposits. Soon as that sort of permeated across the market, then everything started to stabilize, and you can see Bitcoin kind of just went sideways here. Now, I don't know. I mean, this did go to a lower low. So technically we are pointing down, but you know, if they go and break this trend line, and this is a funny one because it's so steep, I might even say that that's your primary trend line and it's already been broken. Something along those lines. I suppose if we drill in, we could probably get really finite about that high, but let's use this high just for argument's sake. So I think that means that we're working off of this trend line now, something like that. So you can see they broke it. I've told you guys repeatedly, do not take a trade in the market, even here, just on a break of this trend line. You got to see some sort of market structure, you know, nice big fat W. I don't really see much of W's in here. We came back up to this trend line. Back and forth, but no real W. And this is what often happens: is the market ends up walking back down the trend line from the other side. Lost the trend line, tried to recapture it, lost it again, recaptured it. All right, well, if we can get a W, if we can get up through here, that to me looks like that might be a workable W. Maybe we're back in business. So I suppose the lower time frame traders, if you just want to go with the flow, maybe hunt bullish bots and see if we can get a stab back up to this top trend line again, or this one up here to hit that megaphone level again. So there's sort of your backdrop of crypto. It's kind of messy right now, and I would be the good part about it is between now and next week, we've got a full week, and we'll have another show between now and the next Fed meeting. I suppose our next Wednesday show will be the night of the Fed meeting. So we'll see. It'd be interesting to see what this pattern looks like. My hunch is we're probably going to have some sort of rolling top through here. But once we get on the other side of this, oh boy, look out. That's my sort of take on what I see here. About summarizes it. I don't really want to go into too much more detail. Also, too, maybe we want to make this show a little bit shorter tonight. So I think I'll probably leave the commentary at that for now. Paul, let's see. Paul's probably out having a smoke, but let's see. Are you here, Paul?
Yep, I'm here.
There he is. All right, so we can pop on over with Paul and listen to what his take and what he sees in the market. Then maybe we'll open up the floor for a few questions, and maybe we'll call it an evening here in about the next hour or so. And then, of course, Ben, if you have anything to add, feel free, okay? All right, so Paul has now officially screen shared, so I will maximize that window. Please understand that Hangouts, kind of the video quality goes down a bit. My apologies, not really much I can do about it. But where is OBS? Let's pop on over to Paul's screen. And let's see what he's seeing in the marketplace. Let's see, which one is it? I think it's this one. Properties, and boom, there is Paul. All right, sir, you've got the floor. Tell us what's on your mind this fine evening. I think we lost his audio. Paul, are you there? We need a microphone.
I'm right here.
Hey, there he is.
Now
he's back. All right, so I'll put myself on mute, and you've got the floor, sir.
Okay. So we loaded up on YouTube the 10 episode on weekly crypto review on very long time frame, still in the long reload zone. I like that. Nothing new on this chart. On a weekly chart, the investor chart, let's say it. I'm skeptical about this this move higher. The price is just consolidating below 25, below resistance. I saw an ugly rejection again on this level. As you can see, 25 tested once, twice. Third time, we managed to get some liquidity above and back in the range, back in the long reload zone. Let's call it that way. I'm still waiting. I'm still thinking range. I'm forced by my plan to think range in this area. In the same time, you can see where 38.2 is, where is the support and resistance level. I'm thinking if the traditional market would allow it, Bitcoin will go up. But let's see what happens on traditional market. Okay, let's take a look at Bitcoin on daily chart. As you can see, exactly like on the weekly chart, this is my range. I was thinking range in this area. And you can see one touch, second one, third time, ugly rejection below middle of the range, and straight up above the range, took some liquidity. Was a lot of liquidity above 25.2. All the people who shorted the market in this from this area, even if it was short from this from 30, 35, they move the stop losses at this level. Yeah, it's logical to do that, and the market just at some point needed to take that liquidity. Now we're back in the range. I prefer to think range market because it's more profitable for me. So I shorted that that move up. I'll show you just in a... Now, if we can close a candle body close above the 25.3, then yeah, maybe I could think higher. At the moment, I'm thinking back in the long reload zone and the middle of the range. Yeah. You can see, if you look at the indicators, you can see this move up. Yeah. And even the last move up, look at the indicators. You can see RSI, how it looks. You can see MACD. Look at OBV, how nice looks. I cannot think in this area with this OBV. I cannot think, yeah, we'll close above the range, and yeah, we'll go to 35 straight up. No, look at the OBV. It's looking ugly. On the 4-hour chart, yeah, same range. We have this trend line. We have this consolidation. On lower time frames, maybe you can frame a trade at the trend line. Let's call it a trend line break. Maybe yes, maybe no. Straight up, back down in the range. If I'm thinking on 4-hour, maybe even lower to think long, I don't think this is, at least for me, is not a good location. I need at least pump chaser zone and a nice W, and then to think up, to think bot setup, or even better, I could wait in the long reload zone, a retest of this trend line, and here maybe I could find a really nice setup. You can see 78.6 aligns pretty clearly with this W retest. Now seems like too far away, but who knows? I'm waiting. I'm trading level by level, so if the market will go to this level, I'll definitely look for a long. Yeah. On 1-hour chart, when I saw this move up, I even said I was live streaming on in the New York session for the community, and I even said I'll take the 3-bar fractal top and I'll short the market. As you can see, I'm okay-ish. I'm in profit for the moment. I didn't even move my stop to scratch at this level because I still want to see a retest of this area. Yeah? I want to see a retest of above 25.3, and if the market will reject again, then I'll move my stop to scratch. If the market will give me 2-to-1, maybe I'll take some profit off and trail the rest. But for the moment, I'm still 100% in this trade. Yeah. This is my plan. I'm thinking range. That doesn't mean you have to do the same thing, but for me, it works really nice. Okay, Bitcoin dominance on 4-day chart. Yeah, Bitcoin dominance is going up. We had an M, a fake out here. You can see it. This was an M. And this move down, yeah, altcoins outperform Bitcoin. Everything was nice. Moon boys, they are happy. Now, I don't see the same movement. I see short reload zone, but the market is trending up. You can see higher highs, higher lows. And let's see how this candle will close. It's a 4-day candle. But if we close like this, we can still go up and retest this week high and top of the range. If that will happen and we'll retest the top of the range, probably altcoins will underperform and will be some trouble against Bitcoin at least. Yeah? So not the best moment to, at least on I don't know, on day trading, swing trading, to think long on altcoins. I prefer Bitcoin in this case. Okay, let's take a look at Ethereum versus Bitcoin on 4-day chart. As you can see, we have this range. We have even a bigger range, but for this weekly newsletter, it's good enough, this smaller one. But you can see, yeah, YAMS. What I see YAMS in this area. This is a nice support. We bounce couple of times, but we have 1, 2, 3, 4, 5. I don't know if this time will be different. Probably. You can see where I'm expecting the Ethereum to bounce against Bitcoin. Yeah, 0.059, 58, something like that. If we lose this level and we'll close like this, we can go down. Same idea. If Ethereum will underperform Bitcoin, then altcoins will underperform as well. So I'm thinking to focus on the long side on Bitcoin. And maybe if you know how to short, you know how to short on futurist market, okay, you can short some altcoins. Maybe it's better to wait on altcoins and be happy. Maybe you can get a nice feel for little old lady or for opposition trading. If you don't want to short, you can wait for a clear setup on the long side. Not there yet. Okay, total Q. I don't want to see total one. I want to see total Q without Bitcoin. And you can see, like I have this phrase here from a long time. Yeah. So we have a range, and we can play in this range a lot of time. You can see where the short reload zone is. We touched it once. Now we are trying to go back in the short reload zone. Okay, we're in the middle of the range, so we can play around in this area. I need a clear W the other side of the trend line, a clear and wide one, for me to think, yeah, maybe we can go even higher to retest, I don't know, 1 trillion. For the moment, we have this range, and at least you should know the market is ranging 70 to 80% of the time, so nothing new. It's something usual on the chart. I don't see anything special. Okay, news reports for next week from today until next Wednesday. You can see we have some news next week. Too much this one. You can see today we have some news. Yes, some ECB interest rate decision. This could move the traditional market pretty nice for a day trader at least. You can see Friday consumer sentiment. Okay, pretty important. And next Wednesday you can see the big news. So let's see what happens until then. We can, if you are I don't know, a day trader, a swing trader even, you can frame some setups if you find something until then. And next Wednesday, I'll be almost completely on the sidelines. Yeah, not even, I don't know, 4-hour chart setups. I don't want to play in this, to be active in this kind of environment. Some ideas on altcoins. Pretty tough to call some ideas on altcoins. So as you can see, we are closer to reload zone. Some are already in the reload zone. We had a bounce last couple of days with the last move up on Bitcoin, but I don't see a clear W yet. Nice move down, but I don't see a nice bounce, but it's just half of the W. Let's call it that way. We still need to wait. So you can see on comp, I posted this chart in the last weekly newsletter. You can see nice long reload zone. Okay, I took this move up and I put another long reload zone. I like this long reload zone to hunt along, but give me a clear W. Yeah, give me a clear W, a nice small window of risk, and yes, I could hunt along on this one. It's pretty cheap, but if it's cheap, that doesn't mean I have to buy it. I need a clear setup. Same idea on this one. You can see nice move up, really nice, back in the long reload zone. Yeah, if you want to trade it on 4-hour chart, maybe even lower, you can take this 3-bar fractal on daily chart, maybe 1 hour, 4-hour chart, it's a W. You can trade something like that. But for 1 day chart, we don't have a W yet. Yeah, this move up really nice, straight down, dead cat bounce. This is 38.2, almost 100%. This move up is 38.2, dump chaser zone, And let's see what happens when the market will go back in the long reload zone, if we'll get a nice entry, a nice setup. Fourth, same idea. Yeah? You can see we are in the long reload zone, but give me a clear W. Let's take a look at what we have, because I have I have for weekly newsletter, I have some charts. So let's take a look at some altcoins we have here. So let's take a look at audio on daily chart. Yeah, same kind of idea. You can see 78.6 lines up really nicely with this for the area where the market break to the upside. Now we had a nice move down, nice bounce. This is a 38.2 probably. Let's see. Let's just take a look, a quick look. Okay, let's see. Yeah, you can see 38.2 and back down. Yeah? I don't want to play this move, not this one, not on this time frame. I don't like this. I want to see a clear W, and I want to see it in the long reload zone and maybe even below. This one for lower time frame traders, okay, but I prefer to focus on, for this kind of move, I prefer to see on lower time frames Bitcoin. It's better for my account. You can see this one, same idea. Yeah, give me a clear W from this point. And yes, comp I spoke about. This one the same. You can see this one, nice move up, but look at this big M. I want long reload zone, preferably 78.6 and maybe even below. Yeah, ING, this one is stronger. Okay, nice move up. If he wants to go up without me, no big deal. I'll wait. If I really want to get a feel, I'll put my alarms and I'll wait until we'll get in a nice long reload zone. Same idea on this one. Same idea on this one. Almost all the altcoins, this one, I don't even reframe it. And this one, I need something like that. Okay, if we'll be back in the long reload zone, I'll try to buy it. But now, nothing to do. You can see, even on this one, we had the trend line, no W. I could take this level and this and put a long reload zone. And you can see, every fucking time I do the same thing. Yeah. Yeah, same idea. Give me a clear W in reload zone or below. Same idea on 1 inch. So on altcoins, on higher time frames, not yet. Looking at Bitcoin dominance, I showed you earlier, looking at the Ethereum versus Bitcoin at the support tested multiple times. No, I prefer to wait for a clear setup. Brian said if I long the Bitcoin chart on that nice move up, wasn't my idea. Yeah, I longed that one, but was Stefan idea from the community. Let me see where I have that tweet and retweet. Let's see. Yeah, you can see his idea. 2017 all-time high retest, deviation W, wait for a retest. I like his style now. He has almost 1 year with me, and he's waiting for the W and the retest of the W. You can see where he hunted, and he will take some profit at this level, and I think he still has some, I don't know, 10% still has some on the some of part of the trade still on. So he'll take some of my trades, I'll take some of his idea. I long it, but I long the bottom, but wasn't my idea. I was waiting a bit below for a 61.8 touch, and we just front run the 61.8 a little bit, but I took this idea because I liked how he framed the trade. I short the top, the potential top at this point. Anything else? I don't know. From my part, on day trading part, I don't think it's the purpose of this live stream. I'm day trading up and down. What I did, I don't know, this month, 2 weeks, from 2 weeks ago, I tried to teach some people how to get a funded account. Yeah. And some people ask me, but what funded account you have? And I said, none. I don't trade funded accounts. I trade my own money. And after that, I think maybe it's a good idea. If I'm trying to teach them how to do it, maybe I should do it. So even yesterday, I managed to get the challenge, the phase 1 and the phase 2, and now I'm a funded account. I have a funded account, not a big one, a 50K account. And I'll probably start trading that account from, I don't know, from Monday. I think it's a good idea I need to, I don't know, polish my plan and see how I'll approach that account. At the end, you know me, look at this chart, 2023, it's an accumulation year. Hard mode, still in my view, we are still in the hard mode. Nothing easy on this market. Definitely not on traditional market and crypto, the same idea. For little old lady guys, for dollar cost averaging guys, yeah, it's a good environment to play around. As you can see, I started my dollar cost averaging plan, a small plan from a long time ago. Let me show you this one. Yeah, so this tweet is from July last year, and I said with P cycle bottom, it's a good time to start dollar cost averaging or investing plan. And you can see the price was at 19.5. You know what happened, 17, 15, and now it's above 20. Just 1 second, please. Yeah. But when I see the P cycle bottom looking left, you can see when the moving average crossed to the downside, it's a nice area to start dollar cost averaging, even little old lady in everything else on the investment part. If you look left, you can see in this area in 2015 and 2019, same idea. And we're still in that environment to dollar cost average or it's a nice way to put your money at work. That's it from my part. I'll have to put my line at the end because Brian will remind me definitely. So treat trading like a business and the market will treat you like a king. But don't forget, you have to treat trading like a business if you want to be treated like a king. If you want to make money in this market, think about you are going to at some exam, you want to get a job or something on these lines, and thinking on the market, 90% of the people they lose money, only 10% they make money. Thinking you are going to an exam and you have another 9 people on the same job. Yeah? It's a bit difficult for me in English to explain. So it's definitely not an easy thing to get, but you can do it. If you put the time and effort, definitely you can. If I can do it and Brian can do it, other guys can do it, you definitely can do it, but you need to put the time and effort first and then to get the results. That's it from my part, Brian. So maybe we should take. Prop firm, but a different. My Forex fund, it's a different, not Stop Step or something like that. Yeah. Not a big deal. I did it a couple of times for some friends to get them funded, but I wanted my trading account. Yeah, please, Ben.
Hey,
Ben is here.
how much time we got? Got another 10 minutes or so before we wrap this thing up. Okay. Yeah, cool. I think it's always fun to check in on the Litecoin chart, right?
Yeah.
All right.
Just 1 second. Yeah, okay.
Yeah, stuff will All right. Yeah, cool. Can you see my screen here? Can you see my screen here? Yeah. Yeah, no need to go on mute. You can jump in, whatever. It's yeah, I don't really have a formal presentation planned. Gotcha. I appreciate that. Thank you. Cool. So yeah, zooming out, this is our long-term Litecoin chart. And just checking in, see what it did this week. And so we had kind of the thesis was that going up into the Litecoin halvening about 6 to 7 weeks, so around about end of June or middle of June, we would be seeing it kind of reach its zenith as it had done historically around about that time out from the halving. And so yeah, we're in a bit of a friendly environment for Litecoin at the moment, and it just still seems to be in that sandbox. So this is the green box. Yeah, it seems to be just really respecting it, right? Just doink right into there. You know, it was like they got into that room and made that announcement about SVB and turning the printers back on when the Litecoin chart hit the
Yeah,
bottom
I
of that
almost
channel.
wonder. It did seem a bit suspicious there, eh? That literally as soon as crypto caught wind of this sort of potential bailout, all of a sudden they'd all just lifted. So
Yeah.
it's quite remarkable.
Yep. And
Do you think
so
that
yeah.
Litecoin does the whole Burr rally kind of thing? Do you think it is doing the same thing?
I mean, I can't see why not. I think it's part of
You
the
know what
whole
would be
risk.
cool is to do a cost of production chart. You know how Shane does his cost of production charts for Bitcoin and the
Mm,
various different rigs?
hmm
Because Litecoin's still POW, right?
I believe so.
Yeah.
Where's Great Del Moody when you need him? Is he out
Yeah,
there?
I don't know. I haven't seen him around in a bit.
I know.
I got a
Yeah.
feeling that he's one of Paul's regulars now, so he doesn't really want to listen to.
No, he has. No, he will be back. He has some business to resolve. He has
I see.
something to do.
Okay.
Anyway,
Cool.
all right. So continue on Ben, if you could, please.
So yeah, I mean, what's interesting about this point here is that it's a check of this nice W here.
Yeah, perfectly, eh?
So just perfectly hit that bottom of the trend channel. Works out about, if you were to take that basically from a double of 67 is what, around about 130, 35. So that would take us up around here. So it could probably work its way a little bit lower and still have a little bit of a
See, I
trade in there
don't
for
like
someone.
this
But
chart because what you're saying is the rally's running out of room, eh?
well, we're a little over halfway through that rally window. So how long was it? 231 days. So how much longer have we got left? Historically speaking, yeah, it's about 100 days.
What is that? So this is March, so April, May, so about the middle of June, July, eh?
Yeah.
Okay.
Yeah. So yeah, maybe
That's probably just enough time for Bitcoin to hit Collins' 50% level.
Yep. Yeah, and I think it's quite interesting on I wonder if I can pull that up.
Interesting how Paul here though, he's not too bullish though. It didn't sound to me like he's very overly bullish.
Well, he's waiting for that W on the other side of the Who knows?
I'm
We
forced to
could.
think range every time is more profitable for me, even if sometimes I'll be wrong, but more often I'm right with the range.
I'm
Yeah.
not arguing with you. I just heard what you said, and you know,
Uh-huh.
you're pretty good at calling directions. So if you're saying that I'm thinking range and this is the top of the range, so I want to look for price to head lower, then I
Yeah.
guess we're not ready to face rip up just yet. And I guess you could make the argument that the size of that wick of this is a weekly chart for you, eh, Ben?
Yeah. Yeah. That's
So
a
a
big
huge
wick.
wick there, huge tail.
Hmm.
So we got just the hugest trading range here now.
Yeah. Hmm.
Could be anywhere. And probably, you know, Paul's comment about let's just maybe sit on the sidelines through the Fed. My hunch is probably both of those extremes are going to be traded through over this next week.
Hmm.
So get ready for some volatility, folks.
Yeah. Yeah. We could even come down and get one of these candle bodies and back up again.
Yeah, well, that would suck, eh? But I guess that, yeah, I guess that is possible. So.
But yeah, then I guess looking at this is the total
There you go. Now there's a
total crypto market cap minus Bitcoin. So just kind of I'd kind of thought maybe there could be like a inverted head and shoulders happening here.
Oh,
And it
I like
was kind
that
of
thinking.
eyeing that 0.5 trillion as like a level
What
back
happened
in
to the guy
early
who,
February.
did you ever see Sharktoshi? He had some ship guy, some ship sailor dude that said that crypto was going to go to $7 trillion market cap by July. Whatever happened? I guess maybe that's how high does your little forecast take us here?
Just to a trillion, which if we do go and make this W out on that, make a right shoulder at $500 billion, it makes sense that it goes to a trillion. That's double.
All right. And
Um,
then the
but
ship capital is 7x of that, eh?
that's running up to a lot of resistance up here.
Yeah.
Yeah, and this is the 7 weeks from the Litecoin halvening. So this is just a bullish scenario.
I like that. I like that.
Yeah,
That's not unrealistic.
yeah.
And it also too gives
That was
Paul, you know, a nice week or two here to play in his range here before we start moving lower in
right.
earnest.
And if that's the range, right? And
Yeah.
so we broke out. You went double that range, I guess. Yeah, you're looking up.
Nice. Yeah.
Up
Oh, that
there.
makes a lot of sense. I like that.
Yeah,
You
or
could probably also do
even
like
if it's
fog and
just
bombs.
off of this range here.
Do me a
It's the
favor
same.
and do a fog and bomb off of this tail that just came in last week up to this most recent high. See where 2.618 is.
Well, so this goes and makes a W from here.
Yeah, but go off of not that high, but the 2 weeks ago high.
Okay, so up here.
Yeah, that high, whatever that high is. I think maybe that candle or the previous candle. I'm not sure. Hey, there you go. All right, so 2.618. Yeah, that also takes you up into your window. Yeah, I like that.
Yeah. So
And
yeah,
actually, what would be cool is do a fib from the lowest low or whatever we hit here, all the way back up to the all-time high, and see if that's like a 38.2 or 50% or something. And I was going to ask if there was, you know, if that 2.618 and the 50% level coincide.
Yeah, well, I mean, there's your 72.36, so your 38.2 would be, yeah, right up there. There you go.
Oh, this is the log scale though, right?
This is,
Yeah.
yeah.
But if you just did a 50% level of the high down to the low, what number is that? I think our recent low is a little bit lower. So does that line up with that 2.618 that we were talking about a minute ago? Maybe. Anyway.
Yeah, it was up around there. It's all of this here, that kind of.
And yeah, 38.2 would be there. That'd be like Collins dump chaser zone.
Mm-hmm.
Yeah,
Yeah, that's what we've
I
gotten
I
that.
like that kind of thinking. A nice rally in through the summer here up into that window.
Yeah, that's if we stick to the Litecoin rhythm and nothing catastrophic happens, it could be a possibility. So
Well, probably also too. I put out a tweet by Vitalik. Vitalik said that he figured that he could actually say that Ethereum is finished, like all the work that he wanted to do on this project by the end of this year. So it'll be interesting to see what Ethereum's chart looks like through this year. Does it make some big ass W? And a rally into midsummer would be a perfect sort of middle part of the big W. Yeah,
right.
I mean, you follow and like it'd be interesting. This doesn't have Bitcoin in it, so does that mean Ethereum's the biggest sort of component in this?
I would say so. Yeah.
How much of a weight does Litecoin have in this?
I don't know. I'd have to go to Coin Market Cap, hey, see what the difference is. So, wow, Litecoin would be. Where is Litecoin? Wow,
There it is.
it's down here.
Yeah.
Yeah. Compared to, yeah.
Wow, it's what is it? That's 2% the size of Ethereum. Huh. That's remarkable.
Yeah.
So 2.5%. So I don't know whether Litecoin is that big of a driver anymore.
Yeah. I wonder if. Yeah.
But anyway, that's here nor there. What would be the hot, sexy altcoin for us to keep an eye on this summer? You think? Is it Magic Internet Money? Do you remember
Yeah, I don't know.
that?
Is it AI coins or is
I don't
that
think they have it.
that dead in the
Go
water
back to
now?
your. You know what would be really cool is if you could go back to this page, and if we could get like a rate of change of these, like which one's got the most momentum behind it. And then of course, is BNB gonna make it? A lot of, geez, you listen to. Do you ever listen to that Crypto Chico guy? He has just got the biggest hate on for Binance right now.
Yeah, right. No, I haven't heard much of his stuff, but
Mm.
yeah, I do see a bit of like videos popping up with kind of negative.
Anytime he can bash CZ, he takes a whack
Yeah,
at him.
yeah, but he
And
seems to be kind of made of Teflon, right?
it's
Nothing really
remarkable, that guy.
sticks. Yeah,
Absolutely remarkable. But anyway,
yeah.
I always like to ask Paul his thoughts on Binance. How are you guys in your community doing over there? Is anybody getting the jitters?
I could withdraw, I could deposit, I could trade. Nothing new on my side.
No, you just.
It's working nice.
Okay.
From what I know, on the spot trading, you don't have any fees, or on Bitcoin at least, against BNB or against the BSD.
Do you use that BUSD?
No, I use USDT usually. I don't use USDC, BSD. Maybe sometimes I'll use when I have a long position against USD and I want to get short at the same time on the same account. So I put some money on BUSD and I short the market if I'm long against USD, but USDT, but nothing more than that.
All right. That actually looks kind of bullish, eh?
Yeah.
Yep.
Yeah, I mean, it's stalled out right on the 7236. A lot of charts kind of went down to 90% drops.
Nice LJ on that one. It will complete that W.
Yeah, like you said, CZ seems to be made out of Teflon.
Yeah, if we complete that W.
All right. I suppose, and Ben, do you want to maybe throw your Litecoin chart in the spreadsheet for these good people? I don't know whether we've had an update on that chart, and then also the total market. That was kind of cool. And I suppose,
cool.
Paul, if you feel like sharing any of your charts to that app, that would be kind of neat.
Yeah, why not?
Of course. And then I suppose, and Ben, was there anything else you wanted to talk about here before we turn it over to the audience?
No, let's do it.
Okay. So we don't have to really make this too long. It is already 8 o'clock. We started about 6:30ish or so. So if you, I haven't seen actually any requests here tonight at all. But if you do want us to take a look at a name that you're interested, please feel free to post it now. I'll swing the screen share back over to me, so at least we're in that sort of high definition.
Ben, if you want, you can. I'll send you even the link for this presentation. You can put the link if you think it's useful.
Okay, great. Yeah, absolutely.
And I could do it every time. I could give you the link for this presentation. So if you want to put it there,
yeah, we could go that route. All right. So Nick has asked for NKN USDT. So actually, this one I went and threw a stink bid in, and I got filled. So I'm right in there with you on this one. Versus USDT on Binance. I guess we'll take a look at this. There's your price chart. I did like the cute little W. And I don't know, do you guys have any sort of take on the fundamental story about this thing?
no.
NKN, does this at all ring a bell with you? I know Adam on the site. He really liked this one, and I mentioned it on I don't know whether it was a broiler chickens or something like that, and a couple other people were like, "Oh yeah, this is a good fundamental name." I mean, I suppose you could make the argument that we really want to see this trend line. We want to see the market on the other side of this trend line. So if anything, what a really good analogy. Look how the market ran right into that level and then just emmed out right on it. So I suppose if you had traded this cute little W down here, if you were trading these things, this is a 4-hour chart. There's your buy right down in there. And I get the distinct impression that's easily 2-to-1. Also notice that is the POC, so you can see 200 SMA. This is off a 4-hour chart though. Maybe why don't we jump out to the daily just so we can get a half decent idea. All right, so there's your daily 3-bar fractal. That's a hammer. Remember we saw the hammer there on Bitcoin, so same sort of logic. If you do see a hammer on the daily charts, you could probably drill down to a lower time frame and find some sort of W to help you sneak in. Also too, this is a pretty good example of the market going below value. This just off of this particular range. I suppose if we zoom out, yeah, I'm still below value. Also too, you can see this looks like the original daily double bottom. That level there, well, I guess that might be a little bit lower, but you could even go there. So down, up, down, up, down, up, down, breakout. Actually, it even broke out there. Another little W down in here. So clearly there's a hell of a lot of buying interest right down in this area. I suppose if you're working stink bids, I've been sort of barking lately. I like to call it the reload zone because it gives you, it definitely gives students the opportunity to try and understand the way institutional players trade markets, in that they spoon feed to the public on face rips. And then when the market comes back down to the bottom end of the range, they reload those sales from up top. So hence the term reload zone. Of late, just because, over the past, I've been teaching this program now for, 9 years. Can you believe it? I've been teaching this program 9 bloody years. And over that time period, I've just found time and time again, usually what I teach in the education program is markets will often dip beyond this 78.6. Then you look back over time and you see that the damn market actually ends up bottoming. So actually nowadays, I just simply call it this 78.6. I call it my BFF. So hopefully that maybe helps you as a way to try and remember this. Think of this 78.6 as your BFF in the market. And BFF stands for Brian's favorite fib. Not best friends forever, but hey, it could be your best friend. So, I love to just be long off of BFFs. So I threw my bid in there, geez, I guess about, a week or two ago. And got filled. So I'm long from down here. It's not a bad level. And I think, going forward, there's probably a bit of money to be made on something like this. I think probably the most important thing here is you're just patient and disciplined. This would be my stink bid fill to just sort of get the position going off of these original W's. So I think on balance, I've got a bit of the position on. For me to justify adding to the trade now, definitely. I think you could make the argument this is like a moving average sandwich. And actually, Chris put out a short today with this where 30 SMA often acts as the top bun. 200 SMA acts as the bottom bun. So there's your bun, there's your bun, and here's the meat in between, and there's your sandwich. So I think that's probably what's going on for the time being is we're stuck in this moving average sandwich. And quite often the 13 EMA actually acts as sort of like the meat in between. You could even argue that this is to a certain degree almost like top end of the range, bottom end of the range, 13 EMA is the middle part of the range. And what's really interesting about this is if you scale in and out, so if we go down to like that 4-hour chart, then you see the 200 SMAs, top end of the range, 30 SMAs, bottom end of the range. And 13 EMAs sort of banging around in between. So, probably down in this area, this is your stink bid buys off of these lower time frames. There's your stink sells. You could even make the argument there's value, so top end of value. Quite often what ends up happening in the market is the market just simply asks, here, let's get that image back. Market simply asks, do I want to, like, you hear Paul talk about markets range 70-80% of the time. And this is a pretty good visual, right? If you use volume profile, you can kind of see that trading range. It's where everybody is trading. So, I often talk to you guys about candle body highs for trade location. Interesting candle body high. And if you had come in and shorted that, you would have looked like a genius. I don't know. I'm not really the biggest fan of shorting these altcoins on these exchanges, but that's just personal preference. And you see Paul, he does it quite a bit. Seems to be very good at it, so there's nothing wrong with that. Candle body lows for trade location. There's a whole cluster of them in here. I wouldn't be surprised if we have to go down and test this level again. And of course, if the Fed isn't very friendly, you could make the argument that you better be a little bit careful here if we actually get market structure below this trend line. I know one guy in particular who teaches his style of harmonic trading. He's sort of taken personal ownership to harmonics, although I don't really think they're his ideas. They've gone back like generations. But Scott Carney, if you've ever heard of him, he will actually, like, say, take this double bottom if that was a harmonic. Let's say, Wyckoff check, he buys that, whatever. And he will actually have his stop and just simply say, look, if I get any kind of market structure on the underside of this trend line, I'm gone. And if it does play out like this and he was buying here, then this is his profit window on the trade. Well, hell, a profit's better than a loss. So be forewarned. When I look at something like this, I see potential that if we do start putting in market structure down in this area here, you might actually find, because of this market structure top, maybe if we're lucky, we counter trend rally back into that as a Wyckoff check there. But like I said, if you get any kind of market structure or anything now that we're below this trend line, that actually turns into a sell signal for me. So be careful here on the lower time frames. Suppose also too, you heard me going on with Ben about Foggenbombs. I'm a huge fan of this, and it was a gift that basically the good Lord gave to me through this whole sickness insanity. So I throw Foggenbombs on everything, and oh, what a coincidence! Look where we stopped. Why did the market start putting in tails and dojis and all that right here, of all places? Why? Well, it turns out it's a chaos level. So you could also make the argument too, interesting how this level's here, that, if we just put the moving averages away, you could make the argument that fog and bomb and this chaos theory, what usually happens, well, I mean, I don't know if it's an argument, but what usually happens is we come down, we tag 2.618, then the market asks, am I really a bear? And we'll get a check of the original breakdown point. And notice that that check is basically going to be right into this trendline apex event window. Remember I said there earlier, if you get that check and it turns out that actually we go and like M out here below this trend line, maybe that's not the best one, maybe like right there. That is an outright sell. So be forewarned, right? I mean, this will be an interesting apex, and also too, notice, look at the date that that's going to happen. We know that FOMC is over here, so this is probably more a conversation of what happens through the weekend with the crypto kids and anything to do with FOMC. Now, if the market cannot recapture this level, and we start to roll over and you start to get bearish, bearish structure, maybe we don't even get this rally, I mean, maybe. Can't really short that. And maybe you get like a rally and something like that, and then you can start thinking things like bearish bot setups, which would be perfectly logical. And if we do lose that and we start heading down through these lows, well, your next stop, notice, what a coincidence. Do you think this is an accident? Look how 4669 is basically a test of those lows. I mean, that's ridiculous. Who planned this? Somebody clearly planned this. And of course, we have a trade set up on the site. My old boss from Prop Firm Trading Days, Michael Patak, who's the president of that Top Step place. He used to always trade. We used to call them Nebraska FU moves, where if the market just dips against this low and then they went after the stops, liquidity hunts, you hear Julian talk about that all the time, you might actually get like a nice little buy signal, kind of like what you saw out of Bitcoin there, and that long trade setup that Paul showed us that one of his buddies took. So it is interesting that the levels are setting up here. This is, I tell you, man, this chaos stuff, this is just the shit. It's so cool. If anything, I should probably shut the hell up about this stuff, because then all of you guys are going to be trading them and then they're not going to work anymore. Too many people are going to be following us. I tell you, it's just absolutely remarkable watching this in action. So I think there's your levels. Doesn't really surprise me that we've dipped into here. Don't really like the fact that we actually M'd out right on this trend line. I mean, that you can't get much more of a rejection than that. This could have potentially been a head and shoulders, but that would have been predicated on us holding that low. Since we went through that low, the head and shoulders is off the table. And what's scary about that is technically, if the head and shoulders is off the table and we really do start breaking down in earnest, you might find that we have to go down and test this line from the other side, which might get a bit ugly here, folks. Just be forewarned. Actually interesting. Might even argue 1, 2, 3. Well, we'll see how it goes. I don't know whether that's that megaphone looks a bit old. Actually, I kind of like that as a pivot. So, we got lots of horizontal support and resistance. We've got the previous structural lows, this structure bottom to try and hold in. You can see this really nice W here. What would be really interesting is when you see a really well-defined W like that, throw on your fog and bombs and just see, does it make sense why the market stalled there? I think it does. Well, I very rarely notice that these fog and bombs, the market can go beyond that 877. Interesting how we rallied into 2.618. We couldn't come back down to the 1, so we had to go up to the 4669. Notice we did 4669. We came right back down to 2.618. Battle. And then another W. You could probably put another fog and bomb up here. Look at that, 2.618 rejection, test the high, and then up to 4669s, and ultimately I think this was the market's objective there, that 877. So with that said, we did put in this bottom, so we could do the Foggenbaums going this way. And notice 2669, and if anything, this is a good example. So we've done the 2669. Notice, look how the double top itself actually set up right off of this 2669, or 2618, beg your pardon. So that's an interesting tell unto itself. That is a rejection of 2.618. So we really should expect a Wyckoff check. Also notice too, remember Ben said this earlier about Litecoin. Notice that this would be a Wyckoff check or a Benkoff check. Remember we used to call it that. And this also is a candle body low trade location. So actually, if this thing's going to pivot, I really like a nice little pivot somewhere in here. So if you're thinking about buying this, maybe let's get a nice little W to come in here, and that'll frame a nice entry for you. Maybe even a little bit lower if we're lucky. Probably also too, if we did a fib going off of the high back down to the low, where does things like reload zones line up? Hey, there we go. So what we're really asking for here is, can the market pivot off a Mountain Man? And actually, that's Paul really likes trading that 0.618 level as well. And if this thing really does puke out and has to come all the way back down to these lows here, and that means we lose this high, then it means if you do see the market break and take back this Wyckoff check, we go through lower, then that means this Foggenbaum study officially disappears. So interesting level that we banged into there. Really interesting level. And of course, Brian talks way too much, so I took 20 minutes to probably summarize what probably could have been talked about in 5 minutes. Sorry, everyone. All right. Anything on this chart that jumps out at either of you that you'd like to add to the equation? As Paul's off having a smoke.
No, I'm here. I'll
there he
wait
is.
for a clear W in the long reload zone.
There you go. So
Without a
Paul
clear
wants a
W in the
W
long
in the
reload
reload
zone, I
zone.
don't want to take that shot on that one.
That would have been a pretty tricky one up there, but I suppose, M's are M's are M's. But suppose you could
No.
probably say that it already hit the objective, because usually I like to use the 50% level as the profit target, but anyway.
I prefer not to short altcoins.
There you go.
I prefer to wait in the long reload zone for a long setup.
There you go.
Brian.
I wouldn't argue with that logic.
Hey, Brian, I've got a question for you
All right.
about the 50% rule. So if you were to zoom out and take a look at a year ago, so this was probably...
This asset or something else?
Yeah, I guess anything.
All right.
Crypto, really, because we had that meltdown in Luna about a year ago, right? So that...
Is that was that 1 year from today? I thought that was back in the summer. Was it the last spring?
Yeah, I think it was around end of March, beginning of April.
Oh, wow.
Yeah. So that the 52-week range is currently sitting quite high, and then 28th of March it starts to quickly go down. In your history of kind of working with the 50% rule, what are some things to be wary of when that starts to happen, when the 52-week range starts to drift and that 50% level begins to drop?
Yeah, well, you don't have any choice. You do have to limit the, this is a daily chart, so 365. So you do have to it's a floating number. Oh, darn.
Mm-hmm.
So I have, you could have said, well, Brian, there's the high, 52-week range, there's the high, there's the low. So what's a 50% rule? So we do that. So you can see how that was hit. So once the 50% level has been hit, then the conversation's over. What I would say is you just keep moving this forward. Now that this 50% level's hit and we keep moving lower, now what you have to do is you have to go the other way. So there is the 52-week range off of this. And, as we're making lows, and since this 50% level has been traded to, let's say like that, we'll do another one here. Once you hit that level, then you have to start drawing the 50% level going the other direction, right? So you could make an argument that as long as this thing keeps moving lower, you just keep moving the 52-week range bar along. And ultimately, like you can see here, at this point here, there's your 50% level. And, you would be thinking, like, as of that date, that this level should be traded to in like half the year, right? So like what, 180 days or whatever the hell that is, right? Something like that. So you would expect that that level would be traded to, but notice that we made a lower low. So you got to move it along. And then we made a lower low. So you got to move it along. So do you see how, yeah, we have the 50% level and it's there. And, there are going to be some people that say, okay, fine. You're guaranteeing that in the next 6 months that the price will trade to 83.89. And no, I'm not. What I'm just simply saying is if and when the market does actually bottom and start to work its way higher, then you should see that happen in about half of whatever the time is that this took. So in this particular case, it's not 52 weeks, right? It's only there to there. So it's only 100 bars. So that means that if that's the case, then we should see this hit within 50 bars. So there's 50 bars. So now this, and notice that we didn't hit the 50% level by here. We actually had to go almost, actually even more. We had to like replicate that size. So this is kind of getting into the Gann angles. So the 50% is like that perfect 45-degree angle. 50% of the time, 50% of the move. But sometimes, and this gets a little bit more complicated, and I don't know whether it makes sense getting into, how to draw Gann squares and how do you square up your chart and all that kind of fun stuff. But if we were going to do just a simple squaring, we would draw, this is what's called the vibrational signature. And then we would want to line up our 1-to-1. Notice there's the 50% level, and that would be basically 50% of this move, right? So that would be up into like there, something like that. Which is roughly, that's almost exactly equal distance. There to there, there to there is 1-to-1. So, I suppose you could use the Gann angles to help you sort of, if the market hits the objective here, then you know that it's actually really strong. If the market hits the objective here, then it's 1-to-1, relatively, 1-to-1 line, it's a normal healthy. If we actually rally all the way up to here, then that's twice, right? Getting all the way up here, that's twice. So that means that's a really strong market. Does that make sense?
Yep.
So, I guess the question here is Gann was obsessed about the calendar year too, though, right? So this is taking the vibrational signature into account and measuring it off the vibrational signature. But Gann always sort of started all of his conversations off with what's a 52-week range, right? And then he would break the 52-week range into the quarters. And then, I don't know whether Marat's, actually Marat was supposed to be on the call on Friday. I know we have call in this Friday. Maybe if we can have Marat come on next Friday, maybe I can actually specifically ask him that question. He would probably be far better at answer that question. what kind of information can we glean by how long it takes to actually get to the 50% level based on things like calendar years? Now, well, I guess what I'm trying to say here is I think that this 50% level was hit, and it was hit way faster than 50% of the time, right? So to me, that seems like that's a very, very weak market. If this was a normal, healthy 45-degree angle off of the bottom kind of idea, well, geez, I'm not even sure how I'd do that. Something like that, then we should have traded to 50% level right here by then. That would be sort of 1-to-1, 1 bar of time for 1 bar of price. I guess you could make the argument that 2-to-1, that would be sort of like your 50% time for half, like how do you say it? $1 movement for a half a day kind of idea, right? One half a period of time for 1 full unit of price. And then the 2-to-1 over here, this would be 2 units of time for 1 unit of price. So how long does it take to actually hit the 50% level? If you can line it up with these numbers, in this particular case, off of this particular low, I don't know whether this is the best low to use, but notice how we hit the 50% level at just about exactly 1 unit of price for 1 unit of time. So I think that's a relatively healthy market. This actually did exactly what it was supposed to do. But the issue here now is that this, like we said to start off this conversation, that this 52-week range is constantly floating. And you'll notice that as time goes by, since we're marching along here, your high, your 52-week high just keeps coming down and down and down and down and down. So what usually ends up happening, and it's kind of a pain in the butt, but you might as well just call a spade, is you're going to find that this 50% level, it slowly works its way down over time as that 52-week high, it starts out up here. Then as time goes by, it's there, then there, then there. Do you see how it's just falling?
Mm-hmm.
So as as of this case right here, this was the highest high. So the 50% level would have stayed constant. Then this now becomes the highest high. So 50% level still constant somewhere in this area. But notice, like when we come down into here, this would have been like let's say the study was here, 52-week high, 52-week low. We're over here. So now our 50% level has to be drawn right there to there. So that obviously is a hell of a lot different than way up there. Does that make sense what I'm saying?
Yeah. Mm-hmm.
So you just keep going over time. Notice that yes, the 50% level was traded to there. But now, right, this is now old. It's moot.
Mm-hmm.
Market comes back down. So now, as of this point, especially as time's marching by, because here we are, this is real time now. So since we already did trade to that 50% level, I'd actually argue that our 50% level that we should be looking at now is that level. But you can see that's been traded to there.
Mm-hmm.
Now, we never did go down to any new lower lows. So I would say the 50% level's already been traded to. Right now, if anything, what we really want to see is we want to see a big move up. I mean, you can make the argument after this big move up, you can do the exact opposite, where there's the big move up. So as of, let's say this is the lowest low and this is the high. So now actually the 50% level's here, and it like instantly came back and traded to that level. So now I would say 50% level, this is old. It's already been traded to. It's probably going to act as the mean going forward, and it has met the 52-week range requirement, right? You would ideally like to see that 50% level hit within, generally speaking, about half of the time that it took for the dump. So, I guess the question here is, would you say that this range here, like from here to here, right? From high to low. Is that 50% of that? No. In fact, actually, it's quite a bit more, isn't it? So I don't know whether I would use the analogy of 50% of the move and 50% of the time, unless you were equating it to the calendar year. Because this is where I first learned how to use that 50% of the time over 50% of the year, is studying 50% levels over entire years. And the logic is that within 6 months of whatever the 52-week range is, we should see it trade back to the 50% level. But sometimes it can happen a hell of a lot faster. I don't know. Does that make any sense? Did that help at all, or did I just do a whole bunch of double talk?
No, that was great. And it was good to see it's been respected all the way along. And
It's freaky
yeah.
how it does it, right? Both up and down.
Mhm.
You know, like hell, you probably even like see like this range right here. Probably that counter trend rally off of that range is a 50% retracement.
Yeah.
So it's remarkable. Like this was the very first lesson that I learned in technical analysis 101. Notice that that rally peak is right to the 50% level. And that's kind of, you should always, like I always say, you should expect 38.2 bounces. But this actually speaks a lot to like Colin and his dump chaser zone. That basically you get a rally up into this window. And if you are still a bear, what the hell is 38.2? There it is. If you are still a bear, you better be paying attention. So this natural technical bounce. Now that that's done, are we still a bear? And if we are, oh boy, you better watch out. And I mean, you can do this the whole way along here. Notice this move here. That just made it to 38.2. So didn't quite get to 50%. Interesting how we held. Oh, actually, whoops, I got my fibs wrong. Got to do the fibs right. Okay. Notice how we kind of held these lows, and then actually it eventually had to get to that 50% level. It's almost like, kind of like foggy boggies. It's almost like the market has to trade to this level. Freaky how it doesn't. So you could, here's another one. We could do this and say, probably this thing can't make another leg lower until the market does trade back to those 50% levels. And sure enough, doink, there it is. But, because this is under 52 weeks, I don't know whether we can use there's the distance. It's not very far. And clearly this is much, much longer than 50% of that. So in a weird sort of way, remember we did the Gann square before? Does it make sense that, I'm just eyeballing this. No, they're not drawn to scale, all that. But you can see that if this was like 1-to-1, and that would be the 1-to-1 line, 1 unit of price for 1 unit of time, we probably should have hit the 50% level somewhere around here, right? Equal distance. If this was sort of Gann's 50% of the time, 50%, then that would be the 2-to-1, and we would probably hit that right about there. This one didn't hit till way over here. So what's the ratio of this distance to this distance? That almost looks like, actually here, let's do it. 1, and that's right there. 2, so that's about 2.5, okay? So that means that we should see, if we draw a Gann square off of this, we should see that this is like at maybe the 3-to-1 line kind of idea. So there's 2-to-1, right? And then if we go on here and we go like the 3-to-1, which is, it was 2.5, right? But you can't do fractions here. But if we go 3-to-1, notice actually, yeah, so that's actually even closer to 3-to-1. I actually got to get that right. There we go. So do you see how this is 3 units of time for 1 unit of price? Does that make sense?
Yeah, that's cool.
So here would be sort of Brian's, Mr. Gann says this should retrace 50% in 50% of the time of the sell-off. This would be like 2-to-1. And actually, I think this would almost be like an equal distance. And I think that's what this event was here, but it just didn't have enough gumption. But it turns out actually it took almost like 3 units of time to get to that 50% level. So does it make sense that you can actually look at this and discern how strong or healthy this market is? What do you think? Do you think that's a strong market or do you think that's a weak market?
I'm gonna say weak.
Yeah. Oh, well, you had a 50% chance. So way to go. If we had just gone straight down and straight up like that into that 50% level, and we were riding right along this line, that's a very strong market, eh? That's probably the way that I would interpret this. I don't know. Hopefully that helps. Gives you food for thought.
Yeah, no, that's really interesting.
All right. Thank you for at least making me feel as though that was all of some value. I don't know whether it was or not, but anyway, that's my answer for you.
I'm
I
sorry to
like
the YouTube.
GAN 50/50.
Yeah, well, actually, you should be right in the middle of GAN right now, eh? I think you guys are doing GAN right now.
No, it's done.
It's done, right? So actually, it'd be really cool to see you start to do some GAN studies on your charts, Paul. But maybe
I love the first part of GAN. The second one, too deep for me.
Yeah,
I
it
like
takes
the
some time to digest him, that's for sure.
Yeah.
You
But
know,
first part, the simple rules from GAN, I really like them.
all right. And then, of course, remember, everybody, you're supposed to properly square your charts up. I haven't done this on this, so there's probably somebody looking at this going, the squaring is wrong. But I'm not going to get into that right now. Okay, let's try and do one more request, and then maybe let's call it a night. So Nick, we gave you NKN. Is that actually, this is still the NKN, isn't it? So I mean, you look at this market, it looks like it's a weak market. That doesn't look like a rip-roaring bull. If we start acting like this, then obviously that's your rip-roaring bull. So if we can get back into that market, awesome. Value players, I think this is, little old ladies, nanny nibbles, all that kind of talk. Grimm's planting flowers, that perfect. And then, of course, if you're down on the lower time frames, you can always think about scalping like Paul does off the lower time frame charts. So. Okay, let's move on. I'll wipe that out. And who do we got here? We got Vet USD. What the hell's that one? Vet. We'll head on over to Binance. Actually, was I supposed to? I should have probably thrown this chart in our spreadsheet, eh? Because I did all that. That's too bad. Doofus. Oh well. You know what I'll do is I'll go back and watch the video later on, and then I'll screenshot when I actually had a half decent chart, and then I'll post that in the room, okay? And then Ben, if you want to add that to the spreadsheet later on, that'll be cool. Or the app.
Cool.
Okay, so let's do VET now. VET and USDT. All right. Probably the same message that we're going to be giving you for a lot of crypto. First and foremost, do you guys now see why I get so upset when the market's zooming up top here and you hear people go, oh yeah, this time it's different, make money, just go and buy, I'll do great. Because, there's the end result. This is why I got so upset and bet. And you probably remember when we first started this show with Derek and Nick and stuff, right? We were up top here like this, right? Do you remember that?
Yes, sir.
Yeah.
Yep. It's exciting times.
Well, and I see that's the thing, right? Is I'm the guy, I'm selling into these rallies, and then I'm watching all the public get all excited and buying, and it's not exciting for me. Actually, it's extremely frustrating. Because I'm like, why are you buying this? Why you're buying my sell orders? What are you people, stupid? I don't know. What can you do? So it's interesting how Ben's take is it's exciting, and my take is it's frustrating. I would actually argue now is when we should be excited. Isn't that funny, Ben? Like I look at a price. I mean, you probably heard it in my voice. I'm a little bit more chipper now, right?
Yeah.
This is Brian's type of market. This is exactly my if I dream about markets that I want to get interested in, this is exactly what I want to see. So how ironic, eh? And of course, look how many people are watching this video. Right? We got 22 people. Woo! Where the hell is everybody? At the top of the market, these videos have like hundreds of people. Mind you, there are quite a few sort of I don't know, crypto crypto shows out there nowadays. So I don't know what it is about me. Because I guess I get angry at people for chasing and stuff. I'm not really that socially liked, I guess. I don't know what the term is. Okay, just looking at some simple trend lines. Clearly, we just ran into a brick wall there, didn't we? This is a simple concept of using market structure to validate your trend lines. So you'll notice that I didn't draw this trend line off of that level. That, I believe, is incorrect. You really should draw them off of market structure. So this is the first M. It was confirmed here. That's a valid trend line. Then, at this point, I would say, all right, well, we're trying to find our way out. Give us a nice W. Never really did get any W's. Got very sharp V bottoms, rallied up, and then put in a nasty M up here. Doink, 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 fail. You could probably even do nice little Foggin bombs off of this top. Right there to there. And there. There we go. So 4.669s look like probably pretty good objectives to the downside. Just off of this cute little top. Probably could do another one off of here. There's also another M there. Working our way down. It looks like the market tried to put in a bit of a bottom down here. It's pretty. We started to work our way up. This might be... I would say that, what I've seen over the years is if the little old ladies came in here and buy, you'd be like, oh, we're looking great, looking good. And if you didn't, did this double, that's 2. And we got up into 3. So we came right back down. My hunch is probably, want to add to this trade. Really good example where if you had bought this on margin and you were just sort of sitting there twiddling your thumbs, I think you were politely told to exit. This thing's just not ready to go. So it had to work its way all the way down here. Would have been totally painful. Suppose you could argue down here, we might have been able to come up with some downside objectives. Notice the original bottom. In fact, I might even argue horizontal support and resistance. That's probably a pretty important objective right there. I don't even know if this thing's even done going down. Lower low, lower low, lower low, lower low. Can we stop making lower lows? I mean, I hope so. But I would say this trend line is damn dogged in here. So we did just get an M top. Suppose you could argue you could probably do a foggy off of this high. Yeah, interesting. 4.669s take us right down against these original lows. And then notice, look at that 3-bar pattern. That's a empire top. Dun, 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 dun. So if we go through this low here, that actually is a sell signal. Uh-oh. So I'm a little bit leery. I suppose, 78.6s. If this low, if this bottom is for real, looks like there's a cute little inverted head and shoulders to trade there. But if this bottom's for real, then let's see the market come down into, this is going to get touch and go because it's so close to these lows. But I think it does make sense that this inverted head and shoulders has a lot of energy built up in this pattern here. So notice 4.669 is going to take us down into these lows. Notice candle body low for trade location. Grim, he likes to hunt the candle that broke out, the candle body low, and that little tail in there for trade location. He's a sharpshooter trader, no doubt. Probably also this tail here looks like that looks a bit suspicious unto itself. So we don't really have any W's here. Another really good example. Do not take this trade on this trend line breakout. That's a trap. And sure enough, the market walks its way all the way back down. Now this trend line has turned back into resistance. And like I said, we get a nice little trade through that low tomorrow. And that actually becomes a fractal failure. And look out below. I suppose if we can hold in here and get some sort of W to come in over here, and then we might have something to work with. It's not really the best trade location. Like if I wanted to buy here, I'd be buying like maybe that 2.618, probably like the 50% level. And you know, Brian, right? I would prefer to be buying here. So what I would actually like to see, so let's come right down against these lows, maybe even flush these lows. Let's screw around down in here, and then we put in a bottom. That's what I would prefer to see. I suppose momentum-wise, we didn't look at the momentum on the NKN. My apologies there. Yeah, pretty good-looking money flow. So the money is continuing to flow into this. It'd be interesting to hear what the fundamental story is. A little bit concerning, though, price momentum-wise. Notice RSI made a lower high, but price itself made a higher high, right? In technical analysis land, they call that divergence. So that's a bit bothersome. Also notice too, Brian would have been sort of pulling his hair out that Willie was stupidly overbought here. So I would not have felt comfortable being a buyer up here. I mean, I don't know whether I would have had the kahunas to short this. Kind of like what Paul's saying. I don't know whether you really want to get active on shorting altcoins. That is sometimes a bit dangerous. But I would say at the very least, can we start seeing some W's? Like the best case scenario, I think would be to start seeing W's come in on things like MACD histogram, on things like RSI, even on Willie for that matter, right? And maybe if we're lucky on this dip that none of these go to new lows, but this does go to a new low, and then we rebound, and then your W, and that sets up your trade. I like that kind of thinking. I suppose if you're a real cheap ass and you want to take a shot, you could risk against these lows and try and come in and buy below value. Actually, no, that's not what it is. That's a MUOC. Actually, the MUOC is right in here. So this probably needs filling in. But Mr. Hoagland, he would be interested in buying down here. And notice 88.6, 4.669. Hoagie would be buying below value. If you could get a nice bullish div to come in on those stabs down here, and you just say, kind of like what Paul was showing you with his buddy, just identifying key levels. Look at, going to take a shot buying against these lows, but if we lose these lows, I'm gone. There's nothing wrong with that. It's really a function of your anxiety. If you want to wait for bullish structure, you want to wait for the bull divs, because you know you're a little bit more skittish, you're a little bit more uncertain, and there's nothing wrong with that. That's just purely a function of your sort of maturation as a trader. Some people can just hit levels. They're really, really good at it, and they are willing to just risk against lows or highs. I'm actually more of a chicken shit. You know, I would personally prefer to see a bit of bullish structure before I step in. Now, if I'm doing little old lady nanny nibbles, that's not really that big. If I'm only throwing a few bucks at an idea, I'll throw in a stink bid, but I really won't worry too much about getting stopped out. I think actually, you know, ironically enough, in the gold market today, we had just the most incredible setup. I couldn't believe it. So this is exactly that kind of conversation. We were totally coming into levels, and the most prettiest little top came in here. And you know, as soon as I was actually humming and hawing about taking a trade in here, didn't pull the trigger, and I said I really want to get some market structure because this market's so skittish. And look at this beautiful top, nice M top. Brian's a chicken shit, and I just sort of walked everybody through how this trade ought to play out in the daily brief. And actually, looking back in hindsight, after the daily brief was over, I couldn't believe how absolutely perfectly textbook this thing traded right down to the 50% level as the target. It's incredible. So there's a good example of futures trading, lower time frame. This is a 3-minute chart. So okay, so back to our conversation here. I think that on balance, that's what I'd want to see to start getting interested. The very first thing that I'd like to see is, can I please have some sort of bullish divergence here in momentum, where you see, where you see these momentum indicators make higher lows, but price makes lower lows. As soon as we see that, then can I get some W's, i.e. Paul's setups. So glad that he loves that idea of just trading setups. This is nice, conservative, very slow, very methodical, high probability. If you just wait for location, indicator confirmation, then price structure, then go. And right now, we're just coming into trade location. No signs of divergence, no price structure. Make sense? Hope so. What do you think, Ben? If you were coming in off the street, would that make any sense to you? Or you'd be like, wow, that was just a bunch of gobbledygook?
Makes sense to me.
Okay, well, that's cool. Paul, what do you think? Would I get run out of your group on a rail for saying something like that?
No.
All right, let's throw that chart in here so Ben can add it to the spreadsheet. And let's see, let's come back to this in a month's time, and let's see what happened. Let's see if we got anything at all that remotely set up like that. Okay, why don't we do one more, then we'll call it a night, because I did see somebody asked us to look at YFI, and then we'll just leave it at that, because already now it's way over time. Oh, fuck, it's already 9 o'clock. Oh, what the hell? Okay, one more. Here we go. There's nothing for me to do here. That's actually pretty easy. So thank you for giving me an easy one. What do you say here? Top end of the range. Pretty straightforward. Bottom end of the range. So as Paul sort of points out, where would you be interested in coming in? Probably a fib off of there up to there. And shorting, I think Paul likes shorting that 61.8. Can't speak for him, but I think he likes that level. What do you think, Paul?
I like the level, but I don't want to short altcoins.
Oh, yeah, there you go. Hey, at least you're consistent, so that's good. Let's say hypothetically he did want to short altcoins. Well, there you go. Interesting, too, how this is also into previous bearish market structure. We also have a nice big wick up there. Wicks and tails like to be eaten. And we could also say candle body highs for trade locations. So not a big surprise that we stalled out up in this area. Brian's favorite fib. I would have preferred you stalled out up there if I wanted to short this. I like shorting up against the highs there. It's interesting when you look at the momentum here in the short term. A couple warning signs here. Notice, and this is what I want you to be looking for, right, to try and keep you out of trouble. Notice we made higher highs. But MACD did not make higher highs, nor did RSI. Willie never did get stupid. So if anything, that's a one saving grace out of this. But it got pretty darn overbought there. But I guess we were stupid. Oh, we got stupid briefly right there. So bear div, and then this actually is concerning as well. Notice the buying bars, the buying pressure. We look at the green bars as these are the days the bulls were in control. Red is the days that the bears are in control. You can see we were making higher highs in price, but the bulls were losing steam. And the bulls, you see this huge candle that went all the way up here, right into 61.8 Mountain Man level. And the bulls, if this had stayed up there, it would have been a green bar, and everybody would have been rah, rah, rah. But then it crapped out right at the end of the day and actually formed a doji, a bearish doji, which to me says that this bar belongs to the bears, which is a volume breakout. Uh-oh, that's not good. You might argue, and this is an interesting pattern, this is what's called a diamond, where actually the top of the market is this doji. But notice those highs are higher there, and these highs are lower. And then you can do the same thing on the bottom. These are lower, these are higher. There's your diamond. Twinkle, twinkle, little star. What this means, though, is if we do lose this level, this is a massive reversal top. And interestingly enough, the initial price objective for this is basically a consolidation range. If we lose that range, then basically you just replicate that range below. So this is your price objective down in here. Looks like we went quite a bit beyond it, eh? You could even argue too, if we went down to say like a 4-hour chart, there's probably some sort of double top up here. Oh yeah, there it is. Up, down, breakdown. So that means you could probably do foggy boggies and come up with chaos targets. 2.618, 4.669. Look at that, folks. Holy shit. That's crazy. So right on the 4669, she turns around and she puts in a double bottom, and now we can start working our way back up. And hello, look at that. I mean, is that not a reason? Somebody take a screenshot of that, right? Show that to your buddies over there on your site, and maybe they'll start teaching this stuff too. So, wow, what a testament to chaos levels. And interesting too, notice how that 4669 was right into the POC, and then what's this 2-bar pattern called? Holy crap, that's a railroad tracks. So now you could argue that that's an outright sell signal off of those railroad track top. So it looks to me like actually this is very technical in orientation. You might have even said, you know, let's go and take this double bottom, and let's risk against the lows. I'm going to buy that level, and I want to take profits at 2 to 1. So I'm going to take some profits here. I get the impression that I would actually like, you know, especially if we do like a fib going back up. Top, what do you think? Where's 50% level? My hunch is it's probably right in this area. And is there probably another good reason why, you know, if you are going to be trading these and do double bottoms and stuff like that, look at that. There's 50% level. So I actually, you know, like I said, one of the very first rules I ever learned technical analysis was 50% level as your price objective. This is nothing more than what they call just returning to the mean. So I think that's basically what happened here. And notice things have gotten pretty damn chaotic once we got beyond the mean. And 4.669, she just couldn't get through there. So fascinating to see how that play out. You know, just kind of like what we were talking about earlier. This 50% bounce happened way faster than 50% of that. So the way that I would interpret this, Ben, sort of further to your question earlier, is since we did this so quickly, right, that was, what is that? It's like maybe a third of that distance, maybe even less than that. That's now a 1 to 3 Gann angle. Does that make sense?
Yep.
So there we know that this is 50% of this range, but that's not 50% of that time window. That's substantially less, which means that this market's actually strong. It's relatively strong market. I don't mind that thinking. I suppose you could argue also too, we banged into these support lines. You could probably do a foggy boggy off of this bottom, and 2.618 is probably right off of that. So let's see what happens when we do that. There to there, there to there, there to there. And there's 2.618. Damn. Isn't this shit crazy? I mean, I'd take a screenshot of that, man. That's just absolutely insane. Boggin bombs for the win if I've ever seen it before. So, looks like there's a cute little lower time frame trade. You know, Paul and all his scalper crew. Suppose, you know, TRIers. We got lots of people on the site doing that as well. Where we go from here, kind of like what I was saying there earlier to Ben, we are doing all of these 50% retracements. So like, this move to here, what's 50%? Remember, we kind of want to see that. That's sort of Mr. Gann. What is normal? What is healthy? What should you expect? And then once that happens, what do we do next? So 50% bounce up. We should do 50% bounce down. And literally price should just keep compressing on itself. So there's the 50% up. There's the 50% down. We could probably now, like off of lower time frames, this is a daily chart. So let's maybe, I don't know, go down to like a half-hour chart or something. So, where are we here? All right, so 50% up is obviously over there. Maybe, I don't know. Okay, yeah, so 50% up is over there. 50% down is there. We actually ended up going far beyond 50% level. 50% up is there. So then you can do another one going down. 50% down is there. And then you can do another one. 50% up is there. So my hunch is we're probably going to come back to this original breakdown level. And that's, of course, predicated on whether we actually get some sort of market structure bottom in here to take us back up top. So if I was going, we don't have it because we made a lower low here on the lower time frames. But if we do get that turn and you're looking for the rally, I would simply use this 50% level here as an initial profit objective. Suppose you can make the argument if we have, actually when I teach on the site how to trade the bot, and this is the way that I learned how to do it decades ago, is what I really want to see is I want to see a market structure bottom that sort of sets the base for the bull flag. So this is basically your flag pole. There's your base, right? This is the ground. And this now is your flag, something along those lines. The rule with the bot, of course, is that we don't want to see it go beyond 66. So bot setup, there is 66. Look at that. Oh boy, it's just right on the cusp of acceptability. So if I was thinking trend continuation now, what I'd like to see is let's reverse that. There we go. What I would like to see is some nice structure come in through here, and can I please have 3 higher lows? And really probably we want a little bit better looking W than that. Something along those lines. So you can actually see this starting to develop as we speak. That's assuming that this 66 holds. So far it is. But interesting, look how the high here of this reactionary candle, this high there, and this high there is actually defining the top of the range. So, and there's the 25 level. So you can almost start to see the market is setting this trade up. So as it stands right now, just be patient. Let the market do its thing. Ideally, we'd like to see 3 higher lows. We've got 1 low. We want to see a second low, but don't go through that low. We want to see a third low. And then if we get that 1, 2, 3, any kind of bullish structure in here, I think you're good to go. And you've got lots of lows to sort of defend your trade. So that's what I would say is going on with this YFI right now. I don't think it's compelling. Doesn't look like there's anything. Oh my God, I got to do this today. If anything, the trader is just patient. We probably, like I said, actually interesting. You can see nice bull divs. So the divs are starting to form. We would ideally like to see this momentum stay positive, stay uppy as these 3 lows are made. And if that's the case and momentum still looks good, you can see buyers are still coming in. We'd like to see more buyers come in to validate all this. Just keep showing me more W's. That's what I want to see. But what I really want to see now is 3 higher lows. We just don't have them yet. So that's sort of your trader. I don't know if I guess there's that. I mean, that's a cute little W. That's it. Like if I was going to teach a course on trading, I could use that W. And also too, do we have any bull divs that set up that W? Cool. You can see. Look at RSI making higher lows, higher lows, higher lows. MACD also made higher lows and then broke out violently here, which is a little bit after the fact. So, I mean, it's not terrible, especially that. That's a cute little bull div right there. Notice that made a lower low there. So there's probably your trade right in there, right in that window there. Well, no, I would say that this is okay. RSI, Willie stupid, nice W's, MACD even div down. So in comes the W in price. I'm good to go to take the trade. So that actually does make sense. 50% level is your target, better than 2 to 1. This is actually what we call an L Tangonator setup on the site. So. Okay, that is 9 o'clock now. So it turns out we actually gave you an extra half an hour or so. I guess we could add this to the spreadsheet, Ben, if you feel like it, or the app. I would say probably there is your div. Actually, is this a reload zone? Reload zone. Yeah, it's acceptable. It's actually buying the Mountain Man level. So, actually, that's not a terrible trade idea. Right in there. And you took profits at the 50% level. Maybe your stop is at scratch right now on whatever you have left. You didn't have to sell it all. Or you just sell it all, take 2 to 1, 2.3 to 1 risk reward. Merry Christmas. So actually that's not bad, you know. It's actually not bad. Something like that. Okay, so we'll add that to the spreadsheet if you want it. Yeah, everybody's hopping. Looks like it's a bit late in the evening, so why don't we leave it at that? I suppose the only other thing we should sort of check in with is big predictions for the coming week. Everybody should ask Paul what's going to happen because it looks like he's about the most accurate out of all of us. So
It's time for me to be run.
all right. Where is the spreadsheet? I think I have it over here. There it is. All right. So Ben was right. Way to go, Ben. Brian was thinking still more down. About halfway through the week, I was looking like a genius because I actually had a short trade that worked really nicely. And then the market just vaulted the other direction. So anyway, it is what it is. Big predictions for next week. What do you think? Do we want to start with you, Ben? What do you think is going to happen here?
Sure. I think maybe we come down and we retest that wick. So I don't know what percentage there is in that, but
Tail maybe?
that's it. My bad. Yeah, you passed the test.
Oh, you were testing me, eh?
Got to keep you on your toes, Brian.
All right. So does that get a +1, -1, -42? What does it get?
Yeah, there's a lot of meat in there. It's 20%. So I'm gonna say
20%, eh?
Yeah, I'm gonna say minus. What?
No,
I'm gonna say
I don't want to bias
-2.
your vote.
-2.
-2. Oh wow! All right. Ben's getting serious here. Okay, that's a big vote. Damn. All right, I'll go next. And actually, I probably should have gone first because I'm the worst at this. I don't know. Let's see. Bitcoin. Yeah, I kind of agree with you, especially with the fact that next Wednesday is going to be the FOMC, eh? So, oh goodness. I do think we're going to be a bit higher, but then I think we're probably going to be back floating around this silly number here. So I'm going to go with a relative. Ironically enough, you know what I'm going to go with is I'm going to go with your bet that you made last week. I'm going to go with a -0.05. I don't think it's going to be substantially lower than where we are right now, but I do think it's going to be lower. Actually, not 0.5. Let's go 5. All right, and now Paul, Mr. Smarty Pants. funded
Yeah.
trader.
So
Now you're running an education program? Damn.
No.
What's the call here, sir?
-2, -0.5. I'll go with +2. 1.5 +2.
+2. That's
Yep.
what I'm hearing?
Yep.
All right. So huge bull rally here out of crude. Or what the hell is this?
No, I'm expecting a range, and if the news are good at the FOMC, they could pump the market after the news. We have this show after the news.
All right. So there's the call from Paul. All right. -2. That gets a red, doesn't it? Yeah, is that color? Yeah, I guess it is. Eh? All right, gentlemen. Thank you kindly for your time and participation tonight. Suppose closing thoughts. We'll make it nice and easy on you, Paul. A couple words from you.
Yeah, just trade setups and don't short altcoins.
All right, trade your setups and don't short altcoins. That's the word from Paul. And from Ben, what's the good word coming out of you?
Send some love to Brian and Liam tomorrow.
Thank you, sir. Love it.
And
thank
yeah,
you, Nick.
hope you all have a great week.
Same sentiment. What else is what are you thinking here, Ben?
Yeah, nothing else. Just yeah, hope you all have a great week.
All right.
See you all again next week.
All right. Thank you very much. Suppose the only thing I'll leave off with is try and trade your plan your trades, trade your setups. I think somebody said that in the past. Try and have 3 unrelated reasons to justify acting. Don't really like them to be under the same category. Personally, I like the location, indicator, confirmation, price, structure, go. And of course, identify what type of risk taker you are. I have 2 really simple rules. If you follow the rules, it's actually pretty tough to lose money at this game. Number 1, try and trade with an algo, right? 3 unrelated reasons. And then number 2, don't take too much risk on your investments or trades, whatever you want to call it. Never risk more than 5% of your stake on any one single bet. That's like the absolute religious, never break that number. Usually what I've found through teaching people over the past 10, 15 years seems to be, well, actually, let's call it 10 years, trading myself over the past 30 plus years, plus clients. Usually, actually, I see people like to take about 1 to 2% risk. That seems to be logical. And then if you're investing and taking a position, I have seen people work their way up to 5%. I'm okay with that. Try not to break that rule, though. If you ever find yourself where you're like, oh shit, I'm down more than 5% of my stake on this idea, just you gotta have the kahunas to step up and say, I was wrong. I'm into capital preservation mode, so I better, cool my jets and hop off and lick my wounds. So slow and steady wins the race. There's no hurry in this. The good part about it is 2023 should be an accumulation year. It's kind of like Paul was showing you with his pi cycle. It makes perfect sense to me. I've done plenty of studies and demonstrations of how I think that this is an accumulation year. So if nothing else, just put yourself on some sort of dollar cost averaging plan. Find a few names that you like in the crypto space that work for you. Just get in there and start accumulating. So, all right, I think we'll leave it at that. Thank you very much, gentlemen. Hugs and kisses. Have yourselves a great rest of your trading day. PMA for the win. All the best. And the only thing left for Brian to say at this point is bye.